Well, hello, active traders. This is Ken Calhoun, president of TradeMastery.com, and I'm joined by my longtime colleague, Robert Greene, the world's top CPA for active traders. Bob, it's great to have you here today.
Thank you very much, Ken. Great to be here with you.
I'll turn it over to you. Bob Greene's the world's foremost authority seen in the Wall Street Journal and a fellow Money Show speaker, and he's helped me with my taxes. His company's outstanding. I highly recommend him. I remember when the IRS wash sale shindig came out a couple of years ago, Bob, you took the point in helping everybody. You're very conscientious about that, and congratulations for doing a great job. You put out webinars and tip sheets and how to deal with all that new wash sale calculation shenanigans from the IRS. And so I turned my taxes over to you guys, and you do an outstanding job, and completely thrilled to recommend Robert Greene and his team of professional CPAs. They're a great outfit to work with, and so hats off to you, Bob. I appreciate it, because I don't know about y'all. I don't want to figure out trader taxes, and my CPA, he's good for business, but he doesn't know trader taxes. Nobody knows him like Bob Greene. So congratulations, and welcome, Bob. I'll turn it over to you. You're the world's top, so it's always a pleasure.
Thank you very much, Ken. Great introduction. Yes, we have a CPA firm dedicated to the needs of investors, traders, and investment managers. And we focus on tax compliance, which is preparation and planning, accounting, consultations, entity formations, and IRS and state exam representation services. This is educational information. It's not one-on-one tax advice, which I recommend that you get. And I'm going to answer some questions today, so you can post them on the board. So we have a short agenda and a short session, 30 minutes. We'll do about 15 minutes of structured presentation and then leave some good time for questions and answers. First and foremost, we specialize in trader tax status. There's a lot of tax benefits related to that. That's trading as a business versus trading as an investor. But you need to know how to qualify. And next we're going to talk about one of the biggest problems for securities traders, which is the wash sale loss rules. And it's particularly a problem because brokers have a different set of rules than taxpayers. So you can't just rely on your 1099-B. You need to do some of your own adjustments. And you really need software for that. Now your ticket out of that is Section 475, mark-to-market accounting. It's tax loss insurance. It gives you ordinary business losses, and it exempts you from the wash sale rules. And your securities ordinary income on is taxed at the same rate as a short-term capital gain. So on the positive side, it's the same tax rate, but on the negative side, it's so much more powerful and in your favor, Section 475. If you have a big loss year to date, you really want to think about making that election on time by April 15th, March 15th for an S Corp. And then we're going to deal with Q&A. So learn how to save thousands by claiming trader tax status on your 2015 tax returns. Business expenses, which is what trader tax status means. It means you're operating a business. It's not the default investment activity. Well, like all businesses in America, all your expenses are unlimited and deductible from gross income, so-called above the line. Conversely, as an investor, the default treatment is you're stuck with miscellaneous itemized deductions for investment expenses, and they're very limited on Schedule A, the itemized deductions. They're only deductible in excess of 2% of adjusted gross income. So if you make $100,000, the first $2,000 is not deductible. And then it's not deductible at all for AMT. There's a piece itemized deduction limitation if you're upper income, and many states limit them. Plus, the two biggest deductions for traders are not allowed as investment expenses, that being the home office deduction and education. Now, secondly, trader tax status allows you to elect that powerful Section 475 mark-to-market accounting to be exempt from the wash sale loss, headache, and deferrals. Wash sale loss adjustments defer your losses to the next tax year, or you waste them entirely if you trigger them with an IRA, between a taxable and an IRA account. So you're going to get stuck with phantom income and paying taxes on phantom income. And if you lose a big chunk of money, you're only allowed to deduct a capital loss of $3,000 against ordinary and other income. So that's why you want Section 475. So there are no limitations. You can deduct all your losses in full and get huge refunds right away. Now, the last big benefit of trader tax status is you probably want to set up an S-Corp trading company or a C-Corp management company and set up a tax-deductible retirement plan and deduct your health insurance premiums, because a sole proprietor trader can't deduct those two employee benefit plan deductions. So business expenses are Section 162. They give full ordinary deductions, home office, education. Section 195 startup expenses. You can go back 6 months and capitalize costs to investigate and inquire about your business, and that could include the education. Then you get a $5,000 expense allowance and the rest over 15 years. Margin interest is business interest. Section 179, 100% depreciation. In fact, the new tangible property regulations were just liberalized, and now if you have an invoice for a computer and it's just under $2,500, you don't even have to depreciate it, you just expense it. Amortization on software, deduct seminars, market data, and so much more. Now, if you're an individual trader, and in other words, you trade in an individual account with your name on it or a joint account with your name on it. If you trade an account with your spouse's name on it only without your name on it, you can't claim trader tax status on that account if you are the trader. So individuals can claim that they're sole proprietors, and like other sole proprietor businesses, traders may add a Schedule C for reporting trader tax status business expenses. So you just do that for 2015. Now for 2016, I think you should consider setting up an entity and trade in the entity name, a pass-through entity like an S-Corp or a partnership tax return. Your entity has to qualify and claim trader tax status, qualify for and claim, and then it can use business expense treatment. Otherwise, the entity, like many hedge funds, would pass through investment expense treatment. So you need to qualify for trader tax status. No election is required. You can qualify for the full year or part of the year. Don't confuse trader tax status and 475. They're separate concepts. You need trader tax status to elect for and use 475, but you don't necessarily have to elect 475. If you have a large capital loss carryover, you want capital gains to soak it up, so you may not want Section 475 ordinary income. And there's a lot of nuances to it, and I cover that in Green's 2016 Trader Tax Guide. Here are the golden rules for qualifying. You need to make 60 trades a month, 720 trades a year. That came out of the Pope Court this few months ago. That's about 4 trades a day, 4 to 5 days a week. That's total trades. The buy and the sell are 2 total trades, 1 round trip. I'm counting total trades. You're counting all your trade confirmations, separate legs of complex options trades. You're not counting unexecuted trades. You're not counting option exercises. Substantial proceeds. It's a regular activity, full-time or part-time, almost every day. Frequency. Executes trades on more than 75% of available trading days. That's close to 4 days a week. Continuous. Few to no sporadic lapses. You're not on 1 month, off of 1 month. Time, about 4 hours a day or more, including research and administration. Holding period has to be under 31 days. You're looking to trade on daily market movements, not necessarily day trades. It could be swing trades too. But just make sure the holding period on average is under 31 days. Your intention needs to be to run it as a business, to make a living. Doesn't have to be your primary living. You can have losses, and the hobby loss rules don't apply. The passive activity loss rules also don't apply. It's got to be a material business setup. Several computers, laptops, and multiple monitors, and the home office, and the education and business expenses. Don't be shy. Deduct all these items. Otherwise, the IRS won't think it's a business. And you need material trading capital. If you want to be a patent day trader in securities, you need $25,000. And you can have a little less, but not below $15,000 for futures and forex and options. Now, some things don't qualify. If you engage an outside investment manager, they're a professional doing the trades. You're not doing the trades, so you don't get credit for it. Similar concept, if you get an expert advisor or an automated trading program and you buy canned software and just turn a switch on and don't spend much time, you don't get credit for those trades. The program does. So you got to be the pilot in the cockpit of the plane, flying the plane. You can use automated controls and manual controls, but you got to be flying the plane. And you need involvement or writing the code for the automated trading program and the algorithms. Now, if you trade in a retirement funds, that doesn't count for trader tax status. So only count the trades in your taxable accounts. Now, wash sale losses are a big problem for traders. You need to learn how to deal with the onerous wash sale loss rules reporting on securities. If you trade equities and equity options and have multiple brokerage accounts you can't rely on your brokerage firm 1099-Bs for reporting wash sale losses correctly. Most traders have multiple brokerage and trading accounts, and they may also trade securities and equity options. Equities and equity options. That means that the 1099-B is not going to give you everything you need to prepare your tax return. You need software. Now, first, let me explain more about the wash sale loss rules. It's all about tax losses versus economic losses. It's written to protect the Treasury. If you do tax loss harvesting in December and get right back into the positions within 30 days, like early January, the IRS figures you took a tax loss but not really an economic loss. I don't agree with the IRS, but these rules don't make a lot of sense, but they apply and they're very onerous. So if you read the IRS publication 550, it talks about substantially identical, which means equity and the equity option. Apple equity, Apple options. And it also talks about the different exercise dates. So if you sell Apple stock and buy back Apple options, that's a wash sale. If you sell an Apple option and buy back the next month's Apple option, that's a wash sale. If you do it with an IRA, it's a wash sale. And it's all here in 550. So brokers calculate wash sales differently from taxpayers. Brokers calculate wash sales based on identical positions, an exact symbol only, per separate brokerage account. That's the IRS rules. They're not doing it wrong. They're following the rules that the IRS requires them to follow. It makes no sense that Section 1091 has a different set of rules that's much broader for taxpayers to calculate wash sales based on substantially identical positions. Not identical, substantially identical. Identical is the same symbol, but substantially identical is not the same symbol. So that's between stocks and options at different exercise dates, and also across all accounts. So you have an individual account. You have a joint account with your spouse. Your spouse has an individual account, and each you and your spouse have IRA accounts, and you each have Roth IRA accounts. You have to import all those accounts into the trading software to calculate your wash sales. On one hand, it may generate underreporting of income because you might have a lot more wash sales than the broker acknowledges. For example, the broker's not going to acknowledge a wash sale between Apple stock and Apple options. So you would think, oh no, if I do it right, I'm worse off. But that's not necessarily the case, because when you buy back the Apple option after selling the Apple stock, you might make a lot of money on the Apple option, which would absorb the wash sale loss from the Apple stock. So it's not necessarily worse off. Or you may sell Apple stock, buy back Apple stock, your broker reports a big wash sale, but you also bought back Apple options, which melted away the wash sale. So doing it correctly may be in your favor. And you need to use software. It's the only way to do it. We have a service where we do it using the best software on the market, or you can get a retail version of the software. Learn more about software that's compliant with Section 1091 on our website. A lot of the software out there that many traders use is not compliant. Just ask the software, do you do substantial identical positions and across all accounts. It's as simple as that. And in almost all cases, they'll say no. TurboTax will say no. You can't import into TurboTax. Now, one way out of this whole mess is Section 475, mark-to-market accounting. You'll be exempt from wash sales and exempt from the capital loss limitation, but you need to learn how to make a timely 475 election and whether to elect on securities only or 1256 contracts too. Those are your futures. It's ordinary loss treatment, the full loss in the current year, no capital loss limitation, no wash sale headaches. If it wipes out all your income, which it very well may, you have a net operating loss which you can carry back 2 years and get a big refund from 2 years ago with interest. Or you can elect to forego the carry back and just carry it forward. And you can also do both. The carry back and whatever's left over carries forward. And it offsets income of any kind, not just capital gains. Here are the election procedures. Existing individuals and partnerships elect 475 for 2016 by April 15th, and it's retroactive to January 1st. If you're an existing S Corp, it's March 15th. You send the election statement, it's in our guide, to the IRS. You staple it to your tax return or extension. You can't e-file the extension. You've got to mail the paper extension and staple it. The second step is to file the Form 3115 with your 016 tax return, and you have time to do that. Now, if you set up a new entity, you're not changing your accounting method, you're adopting it from inception within 75 days of inception by internal resolution, and there is no 3115. Now you're entitled to revoke a 475 election in a similar procedure as the election procedures. So here's the thing, if you have a large trading loss in Q1, even if it's in futures, consider the 475 election on securities and futures if you have a large loss in futures, so you can lock in a big business loss. You don't need a capital loss carryover. That does you no good. And then you can revoke the election on futures next year to get back to lower 60/40 rates on 1256 contracts or to use up capital loss carryovers. So make the right decision about the election by April 15th as an individual entity, and then consider an entity for a do-over on the election or a revocation the next year. Check in with me about those considerations. The savings is huge. All right, so let's go to some Q&A now. Let's look at what's on the board here. I said I'd do about 15 minutes of structured content. And let's also bring up the website to go off the PowerPoint.
Yeah, really good tips, Bob. And everyone who's here, you know, Bob Green's the world's foremost authority in trader taxes. He is. There's always one best guy, the go-to guy in any industry, and Bob Green's it for trader taxes. So ask a question. Don't be shy. We've got a good turnout so far, and he's the top guy in the world to learn from this stuff. So ask a question. We got one from James, and I'll let Bob answer that one. But the rest of you, think of one question, even if it's a simple question, like how do I get started, or what's the biggest challenge that traders face when they deal with changing their trader tax status, or how can I save money as a trader? I've been doing things as usual, and I know there's money I could be saving. So ask some questions.
Yeah, one reason I did it this way with a lot of Q&A, Ken, is because we've had similar content recently, and some of our clients are here, and they may have seen it. So
right.
A lot of times I don't leave a big block for questions. So while people get some questions on the board, I see two. I'm going to get to them in a second. Quickly show you around the website a little bit. So come into the Trader Tax Center, because this is all free content. There's different types of traders: the casual investor without the trader tax status, the active investor who's just on the dividing line and needs to take a close look, the retail business trader who has the trader tax status, the patent day trader, which really is a margin issue, the prop trader who trades the firm's money, and an investment manager who trades other people's money. And there's different rules. Though trader tax status, you can come back here on the site and how to qualify and mark to market. We've covered this content today. We didn't cover tax treatment, so you can go to the website and read about securities or wash sales, which we did cover. Section 1256 contracts, options, exchange traded funds, Forex, other, including NADEX and more, accounting solutions, tax forms and compliance, entities, retirement, tax planning, dealing with the IRS, cost basis reporting, prop trading, investment management, international tax matters, Obamacare. There's a lot to read there. So let's get to the questions now. And thank you, everyone, for posting your questions. I'll just use first names. James asks, if you trade through an LLC with S-Corp tax treatment, can you deduct health and dental insurance? Yes, you can deduct the health insurance premiums, which should include the dental as well. I would have to double check with my tax compliance people. But here's how you do it. You add the health insurance premiums to your wages, gross and taxable wages, but it's not subject to payroll taxes. So you're getting the deduction through the wages, then you get the W-2 as an individual, and you deduct it as an AGI deduction. So it's a wash on your individual return. It's bumped up on the W-2, and then it's an AGI deduction, so it's a zero change in gross income, but the deduction is on the S-Corp level, which passes to your Schedule E. So that's how you arrange it, and you need to do that before the end of the year with payroll. All right, next question. Gene, can you do as a sole proprietor? You can't do the health insurance and the retirement plan as a sole proprietor trader because you don't have earned income for trading unless you're a full-fledged member of a futures or options exchange trading 1256 contracts on that exchange. In all of the cases, you don't have earned income, and the Schedule C can't pay yourself a salary or a fee. And that's why you need to create the S-Corp trading company or C-Corp management company. All right, next question, TR. If a large percentage of trading is in the IRA, is it feasible to make the active trader election? Yes. So I had several clients this year where their IRA was $1 million. Big numbers. Or there are other retirement plans too. And their trading account was a couple $100,000 or $300,000 or $400,000. They ran all the business expenses through the trading business, and the trading in the IRA they considered ancillary. They didn't have to make an allocation of expenses to the account because if they reimbursed themselves, they were concerned it could be considered a self-dealing transaction, and also they wouldn't get the benefit right away of the deduction. So do both. And use the trader tax status on the taxable funds and enjoy the trading in the retirement funds tax-free until retirement. Next question, Maureen. Is a few symbols, NUGT and GDS, considered substantially identical tickers? One's leveraged and one's not. No. No, they're not. The NASDAQ 100 ETF is not substantially identical with the NASDAQ 100 E-mini. There's a lot of symbols out there that can act and mimic each other but have different leverage and other things. That's not substantially identical. When I was quoted in Wall Street Journal this past week about wash sales, when I worked with the writer, Laura Saunders, one of the other people she was dealing with pointed out to her that if you buy an S&P 500 fund from one broker and another broker has the exact same fund with just a different broker's name on it, the person who helped contribute to the article thought that that was substantially identical. But no, not the symbols you mentioned, Maureen. The substantial identical rules are a little fuzzy, but that's been our research. That's not substantially identical. Sandeep. If you have a full-time, high-paying, non-trading job, but meet the criteria for trader tax status, do you still qualify? Yes. I like to think, not like to think, but I think it's prudent to think that the bar is raised. So you really need to hit the numbers. We have a lot of clients on the West Coast, Pacific time. They wake up early. They trade the securities markets, the morning session, before they go to work. Or they trade the futures entirely before they go to work. And then they have flexible job hours afterwards. So it's nice to have a good window to the markets. But if you can explain your day and how you're really putting a full effort into the trading, it works. A lot of our clients have full-time jobs. I do think the entity looks a lot better because with a Schedule C and a big W-2 and with only expenses on the Schedule C, especially if you're a losing trader, it's a bit of a red flag. If you have an entity on your individual return, it looks like you're invested in a hedge fund. And the entity return doesn't show that you have a W-2 job. Your trading company looks no different from a full-time trader. Next question, John. And let's see how we're doing on time here, 8:24, because at 8:30 we're going to pivot to Ken. Is trader tax status possible if most of my income is from medical profession? Yes, but again, we have many doctor traders, and they trade when they're in between surgeries. They have people assisting them. It's amazing how they're able to trade, and they do. But again, it would be so much better to house your trading business in an entity, which is much better for avoiding wash sales and for maintaining clean usage of Section 475 anyway. You don't want to mix your trading business in with your individual activity anyway. But certainly the medical professional. EL. I trade both ETFs and E-minis. Okay. One, ETFs are securities, E-minis are 1256 contracts. If I trade the two instruments inside the same entity and the entity qualifies for trader tax status, how do I separate the tax treatment? When you look at trader tax status, you look at everything you trade. Securities, 1256 contracts, Forex, swaps, ordinary income. It's all part of your trader tax status because you have a macro trading program. But you elect 475 on securities only, you retain lower 60-40 tax rates in Section 1256 contracts, and you make the opt-out election on your Forex. You can have your cake and eat it too, EL. Ellie, we are looking to set up an entity to trade in the next couple of weeks. We live in New York City. What is the best way to go? Well, in New York City, you need the Trading General Partnership and the C Corp Management Company, because you can't use the S Corp trading company because New York City doesn't acknowledge them. And the trading partnership is exempt from the 4% UBT if it's a pure trading company. And then we run the C Corp at break even pretty much after the salary, health insurance, and the retirement plans. And it works really well. You could have an LLC instead of the general partnership, but then there's the LLC publishing requirement. Michael, if I elect MTM and have to adjust all my tax lot cost bases according to my trading software platform, don't worry about that. Whatever's on your platform, tax lots, 1099Bs, if you're using 475, it's all mark to market and none of it will matter. The 1099B is prepared for the everyman. It's not supposed to be customized for your tax needs. So it's not a problem. We can talk to you about that. Siv, can foreigners who are in U.S. based on employment visa set up entities? Are they eligible? Well, you got to talk to your immigration attorney about what you're allowed to do. But generally, it's not a business per se. It's a portfolio activity, and most people are allowed to operate a portfolio activity, and you don't necessarily have to take compensation from the entity. So people who get Social Security are concerned about that as well. So it probably works out for you. Michael, no online brokers provide those adjustments on the trading platform. They don't have to. You're doing it with your own software. What they do doesn't matter. It's for the everyman. It's not expected to match what you're reporting. Cat, and let's check the time, 8:27. Beginning my Forex trading with 3,500. That's not enough for trader tax status. I want to build my account to 15 and then hire us. Okay, you won't have trader tax status right away, but you should consider the Forex capital gains election. By default, spot Forex is ordinary gain or loss. If you file the capital gains election in your own books and records, it's a contemporaneous election, you get capital gains and loss treatment. And on the majors, not the minors, you can get lower Section 1256G 60-40 tax treatment, which is almost 1/3 off tax rates on the gains. Howard, if I elect Section 475 and the loss is much greater than the income, you have negative income. Exactly. You have a net operating loss. You carry it back 2 years, apply it from the highest marginal rates, get a huge refund with interest. It's unbelievable. TR, follow-up. If the bulk of my trading is in the IRA, does trade volume outside the IRA have to meet the criteria? Yes. just put the IRA aside. You got to qualify in the taxable account. Don't count the IRA trades. John, what software do we use? We use TradeLog. We have a professional license. You can get a retail license too. Our professional service is $250 an hour. It may only take the hour. We have a $75 administration charge. If you get an unlimited version of TradeLog Retail, it might cost $350. So hiring us may be a better deal. Check with us. Mark sold and bought within 30 days. Same stock. Yeah, you're going to have a wash sale loss problem. And so the wash sale loss could apply if you bought it back. So anyway, it's 8:29. Those are great questions. I got to all the questions, which was really good because I didn't answer questions on the webinar yesterday.
I'm impressed.
So thank you all. Ken, I'm going to turn it back to you.
Hey, Bob, let me ask you, because I'm going to drive hundreds of people to watch this video for years to come because you're a rock star CPA for traders. Folks, when you work with, and I'm not just working with Bob, I'm a client too. You buy peace of mind because I don't know about y'all, but I certainly don't understand this stuff. And even my CPA, as good as he is, does not know all the ins and outs of trader taxes. So you really have to work with the specialist if you want to make the most. Bob, what's the best way? I want to drive a lot of new clients to you because you're worth it. You're the best guy in the world for trader taxes. What's the best way for people to get a hold of you and initiate? You know, it's again, guys, you don't have to, just do an initial consult and see if it's a good fit and that kind of thing. So what's an easy, painless way for people to get started working with you and your outstanding team of CPAs? Because I'm a big fan, and I certainly recommend you for everybody who trades because you're the best in the world at trader taxes. So how do they get started?
Well, come to the website. Read in the Trader Tax Center. Get the Trader Tax Guide. There's 10% off promotion. That will answer a lot of your questions. Then have a consultation with me. And I just added today a 15-minute consultation because there's a lot of people with just one or two questions, but generally I recommend the 30-minute consultation so we can assess trader tax status if they should elect mark-to-market accounting, can they benefit from an entity, and much more. And I give them a full set of notes with that, with the 15-minute no. Our main business is tax compliance, Ken, as you know. We prepare tax returns for traders. Now, one of the building blocks of that is the trade accounting for securities. And we use TradeLog, and we have the professional license, which is new this year. Otherwise, people get a retail license. And that's all here. Now, when they're ready to set up an entity, which they may do after the consultation, they sign up for our entity formation service. And we have packages which include compliance as well. So the best way to contact us is just click on the Contact Us page and give us a call, or you can do chat. We're cutting back on some of the chat hours now. We got bombarded this week, and a lot of people want tax answers, and they're calling our support people, but the support people can't answer tax questions. You need a consultation with me to do that. So that's why I added the 15-minute one, Ken.
Yeah.
And they have my specific total attention. It's a one-on-one Skype, video, or phone call, and a lot gets accomplished.
Yeah, and I'll attest to that. That's how I started with Bob. I hired him for an initial consult because I wanted to test the waters, and he gave me rock-solid, specific, actionable information, and from there I went forward and completely thrilled. I didn't get any letters of inquiry from the IRS or anything. They completely helped me with the taxes, and I'm completely satisfied and highly recommend Bob Green for the world's top trading tax resource. So give him a shot because he's worth it. He's a good guy. He gets you peace of mind is the main thing for me because I don't know if my CPA can handle it, and Bob Green's a specialist, and he can handle it, and his team can take care of you guys. So highly recommend Bob Green. And Bob, thanks so much for being here. It's been an honor and a privilege. I picked up some new tips, too, watching you tonight, so I really appreciate it.
Great. Thanks so much, Ken, and thank you for all the kind words, Ken.
Thanks so much. And now,
thanks, everyone, for coming. And stay with us now because Ken's up next, and he's fantastic.
Well, thanks, Bob. Appreciate it. One tries. All right. Well, thanks so much. And, yeah, Bob Green said, life is short, and there's only time to where at least I only have time to work with the one best go-to guy or lady in whatever industry. So, if it's, Steve Nissen for candlestick charts and Peter Bain for Forex and Bob Green for trader taxes and the rest of it, it's really good to work with the number one authority in the, Price Healy for options or Tony Turner for ETFs, and Van Tharp for position sizing and trade management. Always learn from the world's best person out there. So, Bob, I was going to say, you don't have to stick around if you don't want, because I know that there's a debate going on. But
no, Ken, I'd much rather listen to you. I'm just muting my mic.
Okay, well, thanks then. I appreciate it. It's an honor. You're the best in the world at what you do, so it's always a privilege to work with the best. So, hey traders, let's get underway. I did an earlier webinar today for Money Show on breakout and gap strategies. We're going to take a look at the very best chart patterns and how to trade them. One of the things that I like to, and I'll mention all information is for educational use only, not making advice off to buy, sell, or hold. You may have seen me all over the world. This is me in the background with my showgirls and dozens of people at my Vegas shows. It's always nice to do that. I used to be a quality engineer and statistician for Ford. I used to be a Fortune 500 consultant for quality management. Used to run Day Trading University. I'm kind of folding that under the umbrella corp of Trade Mastery because that's a better brandable name. I live here in Colorado in the U.S. with my wife and daughter and our pet Shih Tzu. Anyway, you may have seen me featured in the Street.com, CBS Market Watch, Active Trader. I'm in this month's Stocks and Commodities on ADX Breakouts. I've got an ongoing, I'm now a regular featured columnist for Stocks and Commodities, so really pleased to be working with the team there to give good trading strategies to the world's traders, and I like to speak at the Traders Expos in New York. So our agenda for tonight is as follows. I want you to learn some breakout tactics that work. More importantly is look for the charts that are most likely to make you money pretty much no matter where you get in. Charts that have such a strong trend, you don't have to be within 10 or 20 cents or 50 cents or a dollar if you're a swing trader, but instead identify the very strongest high velocity breakout charts that work. And these are ones that I trade myself. I've traded millions of dollars worth of stocks, ETFs, minis, and Forex, and I learned the difference the last 16 years on what works and what doesn't. Professional gap trading, I like minor gap continuations and some entry and exit chart patterns. Now here's some P&Ls. I've traded out of my SEP hour now for swing trades. And one of the things that you want to do as a trader, these are real money trades I did. I got in at 52, got out at 87, in at 23, out at 30, in at 9, out at 19, in at 26, out at 30. I made a bit, and those are the type of trades that you want to set up for yourself, is segment your trade strategy so that you are identifying entries and exits in a way that gets you into a more structured process. And let me give you an example here before we look at live, and these are all my order executions. I was selling the exact highs in the inverse ETFs on September 1st. If you look at the chart and some of those, you'll see what they look like. Let's take a look at strategy though. I want to get underway and give you not only a strategy to work with, but a flow chart. I'm just pulling this up now in my browser. One of the core tools for professional trading that I like to use, and I've taught tens of thousands of people, back when I was a quality engineer and a quality management consultant for Ford, Rockwell, McDonnell Douglas, Sheraton, Hyatt. I used to be a high-powered Fortune 500 consultant, and then I'm slubbing in the trading industry the last 15 years because the margins are so good. But I used to work a lot with process improvement teams, how to make engineering design decisions more cost efficient, how to reduce cost in manufacturing, how to improve outcomes for the company, and how to reduce cost. You always want to put together a top level, say just 5 to 7 step flowchart. I even had a chamber of commerce of a major city hire me to develop a process mapping course for all the small businesses for a major metropolitan city, which I'm under an NDA not to reveal. But mapping out your process as a trader is also vitally important, because odds are you're missing specific key areas that you need to pay attention to improve your trading outcomes. For example, maybe some of you are good at identifying market strength, whether it's the S&P or your market internals like the VIX or the trend. And you're okay at scanning, but you completely screw up when it comes to the math of your trading. Successful professional trading, and I mentioned this at one of my Money Show appearances, is a lot more about the math than the chart patterns. Just like working in your taxes and your cost reduction as a business entity, you need to be able to manage the P&Ls as a much more vital part of your trade decision-making process. So decide your initial size. I just want you to use a binary approach. Over a decade ago, I was much younger looking. Now I'm 52 and a little older looking. Back here, trading with pilot trades. I recorded this with Tim Berkman back at the Mandalay Bay Money Show a decade ago, and I still do that every single day in my own trades. The first decision you need to make as a successful trader, we'll look at chart patterns in a second, but I want to help you become potentially more profitable traders. Have a small versus a large share size that you trade. Don't just arbitrarily trade 100, 2, 3, 4, 500 shares. Start off everything small so that you're scaling. That's how I make money trading. I may trade half a dozen, maybe 7 or 8 instruments on a given day or two, but of those, maybe only 2 or 3 are going to produce profitable trades. And the way I make it add up at the end of the day is to scale in or add to the initial entries. And the way you do that is to manage using your unrealized P&Ls. You know, if you look at the hundreds of examples of real money trades that I have on my Trading Talk forum, which I closed for new posting because I got too many commercial advertisements. But if you look at my trading journal here, and here's 85,000 people looked at this thing. It's been really popular. One of the things you need to do as a trader is manage off your unrealized P&Ls. So if I have an $800 up day, it's all because I had a few itty-bitty stops and I scaled into, over time, a sequence or a series of trades. You know, and one of the things that I differentiate myself from all the rest of the people in the trading industry, or 99% of them, is I think that only people who prove they really trade should be allowed to teach traders how to trade. Otherwise, you're just learning from technical analysts and chart pattern guys who aren't real traders. So I think it's important to learn from people. Even if I'm only making a few $100 a day the hard way, at least it's green, right? Beats a kick in the head. One of the things you're going to do as a trader is manage off your unrealized P&Ls. So you can see I'm kind of a small size trader. That's why I'm still a educator. My biggest failing as a trader is I never got comfortable trading large size. My biggest trade, I made $3,000 overnight, and I couldn't sleep a wink. I was 2,000 shares long MGM and sold a gap. But what you want to do as a trader is start off with small position size, and once they start to flip green, nurture those trades and set a series of buy and sell stop orders to manage your trades professionally. So, you know, even though these are all kind of small, I won't say they're all tiny trades, but that's where you need to start or regroup or retrench if you've struggled as a trader. You know, I remember clearly there was the beautiful, I started a trading group, a local trading chapter in another state many years ago, and one of the traders there, she's a beautiful woman, and she's told me she lost $103,000 day trading in 8 months. And I'm going, wow, inconceivable, to quote the Princess Bride. You know, you need to walk before you can run. So master itty bitty trades, right? 10, 20, 50, 100 shares, maybe up to a few hundred shares, so that when you're wrong, your lessons learned aren't going to cost you much. You know, I use Interactive Brokers, which is $1 a side on a commission. So even commission inclusive, I was able to take all these shots at the market, and it only cost me $50. So I got my lessons learned in there, and as I'm building trades that work out for bigger P&Ls, you know, one of the things you want to look at is doing a sequence of small trades that add up. You know, the best professional traders I know, they trade larger size than I do, but they use the same exact strategy. It's not about, you know, this, memorize this chart pattern. NLP, visual anchor. I had more stops than wins, but I still walked out of Wall Street a few $100 up to the green because I took really small shots at the market on small position size and scaled in on the ones that worked out. And one of the things I want you to do as a trader is, you know, figure out your money flow. Like, this is back when the inverse, I was day trading the flash crash day. Here's back in 2010. And I rocked it. I bet $20,000 against Wall Street in terms of open capital. Your unrealized P&Ls, this is another quick writer downer. I want you to protect at least 80% of your unrealized P&Ls once you're in the money, say a couple $100 or whatever makes sense for you in your trades. You may want to add a zero if you trade large size. But if I'm up $300 in a trade, okay, and I always mention this in my money show appearances, and I ask, turn to the trader next to you, where would you close out the trade if it starts to go against you? All right, a bad trader would point at a chart. A professional trader, I just care about the money flow. So I may protect $280 of that $300. I'll put a sell stop order in here, 1235, get me out at, maybe that's 240, 250. But I'm locking in a profit on each of those trades. So once you get into a position, it's vitally important that you protect most of the money. You don't use your chart patterns to enter, and let me go through those now because I've got just about 15 minutes, but use your chart patterns to scan for high velocity charts, whether it's Qualcomm or airliners like Delta and American have been really strong. Earlier, our gold miners have been strong the last few weeks. Okay. For day trades, I always like day trading minor gap continuations. Like TMH is a good example of a rock star one. I called for my live room members this morning on the way up. Anyway, we know from history that institutional volume comes in and buys these things up on minor gaps. Or PE, another good example. Minor gap, you can pretty much throw darts at this thing and come out smelling like a rose on a day trade, right? Whether you're doing open range breakouts or intraday swings. One of the things that differentiates professional traders from amateurs is when I'm wrong real small. Everything starts off small, and if I have a day like this, I'm thrilled. If I'm up $1,200 or I take $1,800 out of the freaking stock market, I'm a happy camper. And I know my institutional guys, they kind of move the decimal point over a place or two, but that's okay. I'm still kind of stuck in small trader land, so that's why I'm still an educator. Instead of trading full-time and off in the corner trading, I can leverage my knowledge by reaching an audience of thousands of traders, up to nearly 30,000 on my email list, and so we got such a big audience. I do millions in sales, which is cool. I wish I could do millions in sales in my trades. I can do reasonably well, and one of the things I want you to memorize is the fact that money can be made with small size. It all adds up, and if you're doing a $1 commission broker like IB, which I use, or a trade station that's penny a share up to a few hundred shares, don't be paying $7-8 a side on a commission on a broker. That's highway robbery. Even though I pay $6.95 a side on my Fidelity SEP, and that's more than I'd like to pay, but I just swing trade that. I day trade my IB account. If you're trying to make money as a trader, my biggest stop loss is $66. Now, when I do my money show appearances or my Vegas trade mastery sessions, I holler out to the audience, turn to the trader next to you, what's the biggest stop you took this month? And I always get multi-hundred up to $1,000 or $2,000 answers, and it blows me away. Look at it like carnival tickets. For those of you like me who are old school and you remember going to the state fair, and you can buy all the carnival tickets and play the little games, throw the weighted softball at the bowling pins or whatever. You get a lot of tickets for your dollar if you separate your trades into smaller size. So you're doing a much more professional job in aggregate, so that when you're wrong really, really, really tiny small, right? As my colleague Steve Nissen said, yeah, kid stops are so tiny, and they are. And that's the best traders that I work with. I can always tell the difference of who's net profitable and making money versus who's huge in the hole when I do my live events by asking, what's your approach to stop loss management, or how big are your stops? The world's best traders take the world's smallest, tightest stops. The world's worst traders take big stops and they use, their chart patterns to decide your exit. You don't use chart patterns to decide your exit. If I'm up this much money, I'm going to be darn sure to take at least 200 out of that on a bad day. If I'm slow and I'm off trading something else and it gets away from me and it's next thing I know it's $208 in the money on a day trade, I'm going to sell that, take the money and run, because I want these things to add up and give me a decent day's paycheck, right? So when you're trading as a professional, your goal is, once you're in the money at $100, $200, $300, tighten in your scale to exit it with, say, 70, 80, pick a number, but some large percentage of your unrealized P&L, right? I love the TV series, the Shark Tanks and the Profit, and always looking at the difference between successful entrepreneurs and those that aren't. Those of us who are doing well, I'm millions in sales, 17% year-over-year sales growth, and the trust of thousands because I'm a real trader, my strategic differentiation. Most of my competitors aren't real traders, right? And so all they got is talking about charts. Charts are not, and it's doing the trade. It's really kind of cheeses me off is the world's trading community is grossly underserved by the trading educators who just talk about charts, because the money is made or lost with your unrealized P&Ls, okay? So managing off your unrealized P&Ls is a critical success factor, to use a corporate buzz phrase, or a critical determinant of whether or not you're going to make it as a trader. This becomes your entire sole focus, is the money. When I do the live money show events, I say, everybody on the count of three say, show me the money, and booyah, and all that kind of stuff. Your goal is to make a profit. So anyway, let's take a look at a couple of breakout patterns. if you do nothing else as a trader, to make money as a trader, resolve from this point forward and test it out for yourself. Go and do a CSI postmortem on your last 100 trades. You will find that the vast majority of your stops were for trades that were erroneously initiated inside the previous day's trading range. This is the pit of doom. Don't ever trade in days or in charts. Solely focus your energy strategically on buying things that are up at new 2-day highs, meaning above the previous day's high somewhere at a place that makes sense. So that means for First Solar, you don't get in down here, right? You do wait until it breaks resistance. I always add a 30 to 50 cent false breakout filter on top of the dumb money public resistance, because that's where you know the market makers are going to sit on the ask and pull it back down. I wait till over the nearest whole number on these type of charts, over 71 or so. Okay, if you're looking at a nice healthy gap continuation, I'll enter 30 to 50 cents above the opening range of the gap and fire off shots at it until it starts to pull back, and then close out the trade and be done with it. The best professional trades are done before 10 o'clock. There's a lot of morons out there that say amateurs trade before 10, professionals trade after 10. No, Sparky. Us professionals, we hit and run during the open range breakouts up until the 10 o'clock hour. After 10 o'clock, you often get a pivot in the market. So I make most of my winning trades. The most money I've made is usually right on the open from, say, 9:35 till around 10 o'clock. I may take a few subsequent shots at the market after 10, but rarely and rarely, not randomly, and only on strong charts when the market itself is at a breakout. Oftentimes, you'll find you got a second chance at a breakout. Let's say you're off trading TMH and PE and making a boatload, and this one ran up without you. Never fear, Ken is here. Boom, it went back down. Previous support is now current support. You always look for these bear cup reversals and sell into the 50% retracements. Usually if I take a trade like this, I'd buy the 19, sell the 19 and a half for a day trade. I would have missed out on this because I don't trade later in the day. But I get the either the first or the second leg of the run, and it's all parked conveniently in the profit area up above the previous day's resistance. So you don't need MACD and stochastics and RSI and let's do LA waves and Fibonacci fans and blah, 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 blah. No, Sparky, it's all about making money. It's all about price action breakouts that are strong and professional. So let's take a look at some swing trading charts that make sense to trade. One of the core strategies that I advocate is trading strong sectors. So for example, today our Philly Gold and Silver Index was up the most. Pharmaceuticals and the Dow Jones were up with the finance and as finance sector trailing, but gold was hot. So this means tomorrow y'all might want to look at instruments like, I don't trade GLD because it's a little pricey. I like trading, one of the traders had mentioned this, I like trading GDX, I trade Barrick, ABX. I'm currently long Barrick in my Fidelity SEP. I'll trade Gold Corp, I'll trade Nugget. It's a little pricey, under 50 a share. Now 60 a share, but that's a strong hot sector that's worth considering for the next trading session. A good professional trader always knows your numbers. Like my longtime colleague Brian Tracy would say, the hallmark of a professional is that they're prepared. And if you want to set goals and action points that are designed to help you make better winning trades, one of the key differentiation points is trade the strongest charts in the strongest sectors. Don't make it rocket science, but do trade off your P&Ls on the strongest breakout. So here's DIX DKS, nice classic 45-degree angle breakout. I will often enter 50 cents above the nearest whole number high. So that's kind of my default because I want to avoid a false breakout. If it pokes its head up here to 43, it'll go to 43.10. If I bought there, it'd likely get zapped and false breakout, comes right back down, I get stopped out, then it runs without me. So do that a few thousand times and you learn a better way to trade, which is specifically using a false breakout filter. Roughly 50 cents or so works most of the time, at least in my own trades, for instruments priced in the 20 to 50, maybe 20 to $70 share range. Look for sympathy plays in the strongest sector. So the strongest sector right now, despite today's strength in gold, the strongest visual sector over the last couple weeks of price action has been the airline stock. So United is way up. Southwest, gotta love, right? 35 to 42. I only fly United, but love looks good to, you don't have to fly it to make money with it. American Airlines, a nice rock star chart from 36 to 40. Delta, also another good strong chart from 40 to 50, or just under 50. So those type of breakout charts in the strongest sector, and remember I said this, and come back to me, now we don't buy right at the obvious high. We buy 50 cents or so above the current high. But, odds are what's in motion, just like human nature, if kind of looking at hiring employees, which is a real pain. How many of you, I was asked this in my Money Show presentations, how many of you, show of hands, have ever worked for a boss who's a total control freak? Or ever hired an employee who's a totally disappointing moron? Or worked with coworkers that are like working in a circus with clowns? It's really frustrating. So when you're hiring stocks to trade, if you're kind of like one of the sharks and you want to invest in a business, second-year growth, seven-figure sales, 30% margins, design and utility patents, I'll go ahead and take the shot. But I only trade several instruments. I might partial out, say 50 or 100 shares in each of these. So I'll spray entries, buy stop orders in Delta, United, Southwest, and American at 50-cent triggers above their current highs. By diversifying, I can make the most of that team, and if one of them misbehaves, I can say you're fired. Let's say I buy 57.50, it goes to 57.80, stalls and drops. I'll sell it all at 56.50, take a 1-point hit, kind of like firing an employee or saying, for that reason, I'm out, because what used to be a good chart, now not so good. It makes sense to flip to the other side and trade out. But maybe the Southwest is the one that takes off and runs up to 45. By hedging my bet, by playing several instruments in the strongest sector, I multiply the odds of me getting it right somewhere along the way, right? So it's a very good conservative approach. If, like me, you've been burned by trying to do 1,000-share trades and losing $600 or $800 and getting frustrated and having to, keep that information private, I always get these furtive looks when I do the Money Show live expos, and I say, how many of you, show of hands, have ever concealed a trading loss from your spouse? Aha! I got 2 degrees in psychology, UCLA and Cal State Long Beach, and my master's was in Kaizen on improvement. Anyway, I know human nature, and one of the things that, you may have a problem in your trading if you conceal your trading losses. I like to holler downstairs and say, hey, honey, I just made another $400. And she says, omedeto ken-san. She's from Japan. I still don't understand a word she says. 17 years married. Key to a great marriage is communication. As little as possible with somebody from a different country. You don't understand what the heck they're saying. They don't come with subtitles. There ain't no mute button. So you just shrug your shoulders and say, okay, honey, whatever. That works. A little trading humor there. Anyway, if you're concealing trading losses from a spouse, you're probably trading too heavily in charts that you have no business trading, with very imprecise trading entries and exits, over trading choppy charts. 2 biggest errors, and I've worked with thousands of traders both in person and over the internet. One of the things that I find is they take 2 big stops, number one, and I'm sure that Bob and his team have seen more than probably anybody else in the world, just the size of how horribly, I wouldn't have the, if I were face to face with the client who was booking, huge losses, it'd be hard for me to conceal my dismay from the client. So kudos to those of you who can do that. But, for those of you who make money as a trader, you want to start leveraging, okay? And if you're hemorrhaging money with losses and concealing that from a spouse, retrench and regroup, Take a very easy process. There's a PDF version on the site too there, but you can just bookmark. You don't have to opt in or anything. It's just one of my many courses. I have over 70 websites, a big empire of trading university sites, and the rest of it. Before my copycat competitors, I have Day Trading University, Swing Trading University, E-mini University, Trade Mastery, Stock Trading Success with Steve Nissen, Forex videos with Peter Bain. I got all kinds of things. Anyway, use a process and figure out where it's costing you. Do some cost allocation to each step of your process, and the way you do that is do kind of a post-mortem over, say, your last 5 or 10 trades and say, hey, for the winners, where did I get it right? Where do I give myself, then just mark a plus. Maybe print this out or make your own version and put a plus for the wins and put a minus by the stops, or quantify it with a dollar amount. Maybe what you'll realize is that you're blowing it here, where your initial stop losses are too wide, and you're using a horizontal support line on a chart instead of, say, a dollar-based cost stop loss. Maybe, when I swing trade, I like to use somewhere maybe in the range, I don't know, 150, 250 is going to be the maximum heat or pain I'm going to take in a stop loss on a swing trade. And the way I do that is use very small initial 10, 20, 30, 40, 50 share initial trades. Usually I'll buy $500 or $600 worth of the instrument and then scale for those that make money. And the ones that go sideways and go down, I scale back out. But it's vitally important that you learn the difference between successful P&L based trading and the overly simplistic, erroneous, leads you guys down a garden path that doesn't work thing of just looking at charts, right? If you're just trading off charts, let's say you're buying Coach handbags and you buy at $39.50. Where's support? Well, if you're doing a classic technical analysis deal, the nearest support line would be way down here. That's the previous resistance, and you'd be taking a huge, 3-point stop loss, which is way too big for a $30 stock. If you're trading Delta, maybe your initial stop, you may set it here. You might set using the window / inverse head and shoulders cut pattern high here. Wherever that's completely wrong. If I buy 49.8, I'm going to sell it all back if it gets down to, say, 48.50. That's the price that proves the trade wrong. I can always rebuy if it breaks over 50. I'm not going to use the chart and say, well, I got to let it drift sloppily down here. So when you're looking for best trade setups, you're looking for best opportunities, I think one of the things that can really serve you well as you endeavor to make more money as a trader is trade nice, clean, wide-ranging charts that are most likely to make you money. If you're day trading, only trade 2-day highs, only trade outside, never ever stick a fork in the, and by the way, big picture, if you want to be even more conservative, which you should endeavor to be, only trade out trading day. So here's our S&P for today. It did a kind of a bearish drop and then a bull cut breakout into the close, so we closed off strong today. Only initiate new trades when we are outside the previous day's high. Completely avoid end days. So tomorrow, if the market opens 1940 and goes sideways, don't trade that day. Only trade long if the market gets over 1955. Now that may mean you only trade 1 or 2 days a week, but that's much smarter than over trading 5 days a week and trading churn charts that cost you too much money. So you want to make money, and so the best way I found, at least in my own experience, is to stack the odds in your favor to where you could pretty much throw darts at the thing and still come out smelling like a rose and make some money. So use a process that makes sense. Use a step-by-step strategy to mark out areas for improvement in your trading. And I wanted to wish you all the best for success in your trade. So with that, I'm going to wrap up always good to do a call to action. If you want to, well, here, let me scroll here. Go to trademastery.com, and I've got close to 4,000 people now registered for my Saturday shindigs. This was a couple weeks ago. Trademastery.com/free, or there's a link behind the cool video at the top that says, click here for free Saturday events. They're only 20 minutes long, so I like to do a hit and run market update each week Saturdays, and you can participate in those as my guest. I've been doing them 4 years now. I'm on my 4th year now doing these, and I did them back in the early days in the year 2000, and now doing them again. So we're up to, it's the #1 turnout in the trading industry from, at least from what I've seen, for an ongoing webinar series. And I'd certainly like to help give you my weekly market updates absolutely free. It's not a pitch fest. It's not a PowerPoint deal. It's all looking at live market charts in 20 quick minutes, which is, I think, one reason why the numbers are so high is because people are impatient. So I accommodate that. And so in 20 minutes, you get my best stock, Forex, E-mini, and ETF swing and day trading picks for the upcoming week ahead. So that's why I got a big turnout. So anyway, thanks so much, everybody. And again, a big shout out and a thanks to Bob Green from Green Trader Tax, the world's top tax authority for active traders. And thanks, everybody, for being here. I will go ahead and send out a recording of tonight's session to all of you, and it'll be in the GoToWebinar Thanks for Attending note. I don't know that I'll put together a dedicated email blast. I'll just put it in the automatically generated GoToWebinar, and there'll be a Amazon S3 link. So I don't know if you're if you're still here, Bob, or not, but I wanted to thank you for being here, and thanks to all the traders for being here as well. I guess that'll wrap us up for tonight. So anyway, y'all make money out there, and don't donate money to the markets, and make sure that you're learning from those of us who are intelligent with a good, strong professional background, and actually prove we know how to trade a little bit. You know, if you're losing as a trader, it's probably not your fault. You've been learning from these overpriced people with fancy websites, but have no, it's like that commercial back in the day where it says, where's the beef? Where's the real trades that prove that the person's a real trader? The industry is infested with wannabe fake poser con men who just talk about charts and aren't even real traders. All they do is talk about charts. How can you learn from it? Unless that's all you want to do is talk about charts, then yeah, go for it. But if you want to learn how to trade based off of P&L management and money management, and at least learn my lessons learned from how to make money in your trades, certainly hope that I can be a part of your success as I have for so many other thousands of people the last 16 years. So anyway, thanks everybody. It's been great, and I'll see y'all in our next session.